We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but you know, I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not. Right? It's above my pay grade. The dollar is the strongest medium of exchange in the world, and so it is strengthening against other currencies, but the currencies are the weakest store of value. The foreign currencies are weak store of value assets. So foreign currencies are collapsing, like South American currencies, African currency, Sri Lankan currency, you know, Middle Eastern, you know, well, Turkish currency, Lebanese currency, Russian, Ukrainian currencies. Russia, I guess, doing better because they're tied to commodities, but I think that that you've got a basket of strong currencies to be pegged to the dollar, and they're losing 15% of their value or more a year against scarce assets. And then you've got weak currencies that are losing 15% of their value against the dollar, right? If we look, you know, the South African Kruger rand, the Korean won, the Great British pound, the euro, they're all down 11 to 13%. Polish is down 16%, the yen's down 18% over the course of about a year. So they're collapsing against the dollar. And then the developing markets are collapsing 40% against the dollar. So do I think it'll continue? Yeah. I actually think that in a digital world, the 8 billion people want to hold the dollar, they don't want to hold a local currency. So if I could swap, like name a currency in South America you want to hold other than the dollar. There isn't one. So the only thing that keeps people from swapping all their local currencies for dollars is whether they trust Tether, or whether they can get access to Tether or Circle, right? Right, because UST wasn't a trustworthy dollar, right? And maybe you can't get access. But I think that there's no doubt if you're looking at your bank freezing your assets and devaluing your assets in local currency, you know, you want to hold the US dollar as your medium of exchange. And you want a simple world, or a simple way to see the world. If you need your money in less than 4 years, you probably want to keep it in the dollar. And if you need your money in more than 4 years, if you want to hold it between 4 and 40 years, you put it in property. And the best property in the world is Bitcoin, and the best currency in the world is the dollar. And there are weaker properties, like an Airbnb or building or stock, and they're weaker because they've got counterparty risk, and they've got tax risk and execution risk and competitive risk. And maybe they're not so portable. You can't really move a ranch out of Zimbabwe to San Francisco when you have to flee the country. So what can you move out of Africa to San Francisco when you want to flee the country, right? Bitcoin you can move, and the rest, unclear. So I think that the general macroeconomic trend, what can you say? You can say the economy doesn't work so well, right? The economy doesn't work so well. It stopped working well in February of 2020, and I think Lynn Alden tweeted a chart of Japanese tourist arrivals, where the entire Japanese tourist industry went to zero in March of 2020, and is still at zero. So it's pretty obvious some things just don't work. The economy's not going to work well. The money supply is increasing. The Inflation Reduction Bill is, what is it, $600 or $800 billion worth of spending. Everybody's going to keep spending more money. Some currencies are going to collapse completely. The government's going to collapse with them. That'll happen in the developing world. That will result in capital controls. We saw it happen in Sri Lanka. You see in Nigeria and a lot of places now it's illegal to accept dollars for payment. So you're going to have capital controls, you're going to have export controls, you're going to have import controls, you're going to have wage and price controls. That will impair the economic machine from functioning more. As that happens, governments will print more money. As they print more money, the value of the currency will fall against scarce desirable assets. You can't print more energy, and so that's why you can't print more food. So certain things will have tangible value. The best idea in a world where it's very difficult to move cross borders, and it's very difficult to manufacture things, and it's very difficult to buy and sell things, the best idea is digital energy, you see. Because once you convert energy to a block of encrypted energy, and that's what Bitcoin is, you can hold it forever with no maintenance cost. And you can transport it anywhere in the world for no transaction fee. Everything else is more expensive. The average person can't hold 100 barrels of oil for a decade. You can't warehouse oil, you can't warehouse soybeans. And if you operate a business, you might wake up and find out that your business is not allowed to export or import or manufacture or something. And so all those other parts of the economy, they struggle with these headwinds, and you have to take them into account if you're an investor. I think that Bitcoin is 1,000,000 times better than gold, and is going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is, but I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You could see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction-free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service, and you ought to sell your gold and you ought to buy Bitcoin, because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. Just that simple. I want to speak out about Bitcoin, right? The chair of the SEC was asked probably 6 times in congressional testimony and other public appearances whether Ethereum was a security or whether it was a commodity, and he wouldn't endorse it as a commodity under testimony and in the public eye. So I think it's above my pay grade to opine, and I know there is a big debate. There's going to be a debate, amongst regulators. There's going to be a debate in DC. So they will work that out. I happen to be of the opinion it's an investment contract. I think it's quite evident to anyone that spends a few minutes thinking about it. But, I'll leave it at that. People are free to make their own decisions. What you want to do is get rich slowly, not get rich quick. And that means that the time-tested technique for investment is you buy high-quality, scarce, desirable property, and you hold it forever. And you just got to figure out what is scarce and desirable and high quality. The way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts 2 types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And so you end up with a circumstance where you could be holding $1 billion and it looks like you have $200 million and no one can tell the difference unless they go to the trouble to figure it out themselves, and that's very opaque. So I would say that people that really are fixated upon GAAP optics, right, they'll be a little bit troubled by it, and then people that have very short-term time horizons are troubled. But for the rest of the world, it's a pretty good idea. It's the best. I've just pointed out to you, we've outperformed every asset, every big tech company, every enterprise software company, 97% of all the companies using this strategy. So if the volatility is the price you pay for the performance. And if you can't stomach the heat, right, you can't be in the kitchen. So I would rather win in a volatile fashion than lose slowly in a non-volatile way. I think that Bitcoin is the only asset in this space that is broadly institutionally held, and it is more than zero. For example, we bought $4 billion of it, so we know that companies have it, we know that institutional investors have it, we know there are insurance companies that hold it. So it's not zero, but it is not nearly as broadly held as it will be. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of JP Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about us, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, at the DC level over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible is always going to understate the value, and it's also going to create confusion. Because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference, and it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on. I think a great deal of the bad behavior has been flushed out. I don't think you can say everything. I think there's still a lot of unregistered securities in the crypto ecosystem, and it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities. And there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging, and I think the people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need to grow. We need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp the way to segment the market and the right way to think about all these assets. I'm awesome. I'm doing great. Life is good. No, first of all, that's a trollish comment. If anybody looks at what I've said consistently since September of 2020, what I've said is Bitcoin is scarce desirable property, and I intend to hold it forever. For the rest of my life, I'm not a speculator. And what I've also said is if you're in a collapsing currency environment, you should have negative working capital. You're better off to have debt than to have equity. And what's happened in the past 2 years is currencies have collapsed. You were better to have debt than equity. When I told people that I like mortgages, the mortgage rate was 2.7%. Mortgage rates nearly doubled, and if you had a chance to take a mortgage at 2.8% and you waited till the mortgage rates went to 5.2%, the cost of your home just went up by 80%. So paying off your home with cash is probably not a good idea when mortgage rates are cheap. Holding cash that's losing 20% of its value is not a good idea. The blue dollar rate is 300 pesos to the dollar. I keep pointing this out. So I think what some people just want to find something skeptical or critical to say, but telling people that they ought to buy desirable things and take cheap money to do it and hold it forever is simply the way that you preserve generational wealth, and it's worked that way for a long, long time. Yeah, we've been planning to do this for 4 years. So I just think we got caught up in some very colorful media. You may know, most people don't, I'm the controlling shareholder of MicroStrategy. I have 68% of the voting shares. And I started the company 33 years ago. So I've been the CEO for 33 years. I'm the chairman of the board. I'm the controlling shareholder. And I've been talking about Bitcoin for 2 years. And about 2 years ago, we promoted a gentleman, Fong Li, to be the president of the company. And he was the president and the CFO. So he's been running the day-to-day business hands-on as the president for the past 2 years. And 99% of the activity of the business is selling software. So we have 2,150 people. We sell software, we make software. We have thousands of customers. We do thousands of transactions a quarter. We hire hundreds of people a year. We train thousands of people a year. All of the activity is enterprise software. It turns out that once a quarter we do a Bitcoin transaction, and I talk about it a lot. So if you think about it, you realize it's very logical for the CEO of the company to be the person that actually manages the day-to-day business, because all the transaction and all of the labor intensity is all about software. I don't need to be the CEO in order to oversee the Bitcoin side of the business, because I can do that as the chairman of the board and as the chair of the investments committee, where we provide oversight for Bitcoin acquisition, and maybe once a quarter we might do a big deal, like borrow 200 million or issue equity or something, or we might buy Bitcoin, but it really is something that can be best supervised at the board level. And the path for Phong to be CEO has been set in stone. Well, it's been set for years and years. He was promoted to Chief Operating Officer in 2018. And he's been the CFO of the company since 2015. So after 2 years as president, it made sense. It's very clear to the shareholders he was the heir apparent. And we hired a new CFO, a full-time CFO, Andrew Kang. He joined in May. And so once Andrew joined as CFO, that cleared the way for Phong to become president and CEO. I have been working with him hands-on to transfer the entire business to him for 7 years. It turns out that in the last 6 weeks, Bitcoin traded down. And when Bitcoin traded down, we ended up taking indefinite intangible charge in our Q2 results. That, by the way, it's like a $900 million charge. It was very colorful. I think it was cited by some critical journalist. But we'd already covered 700 million or 750 million of that charge by the time we even reported it. It's just the GAAP accounting doesn't let you write up your assets. If you're positive, you just say, okay, well, this is normal succession and appropriate corporate governance. If you just want to write something trollish, you would pair the non-cash write-off with me taking the executive chairman role, but obviously it has nothing to do with that. It's always been the plan for me to be executive chairman and for Phong to be the CEO. We don't run the company based upon Bitcoin volatility. And we don't run the company based upon indefinite intangible accounting charges. That would be putting the interest of our shareholders after the optics of a random troll. We run the company based on what's best for the shareholders and what's best for the employees and what's best for the customers. So the trigger for us to promote Phong was the arrival of Andrew as the CFO. Because Phong was the president and CFO, and you can't have a public company where the CEO is also the CFO. It would be inappropriate to do that. Like, only in the most dire of circumstances would you ever do that. So when Andrew arrived, we wanted Phong to be CEO, and the accounting charge is an intangible, non-cash charge. It really, again, as I said before, Bitcoin traded down to 17,600. We wrote our assets down to that level. You know, Bitcoin is trading at 23,900 right now. We haven't written it up, but I mean, the shareholders understand this. You can see in their reaction to the announcement. On August 10th of 2020, we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the Nasdaq's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. Now, if you look at what we could have done, we could have competed with the enterprise software companies in our industry. The best performing enterprise software company in that time period is Oracle. Oracle is up 39%. MicroStrategy is up 166%. IBM's up 2%. Salesforce is down 4%. SAP is down 40%. We're definitely not losing. Now, if you want to compare us to the best companies on earth, the strongest companies on earth that are more powerful than governments would be Google, Apple, and Microsoft. Those three big tech companies are up 58%, 46%, and 34% respectively. Amazon down 11, Facebook down 35, Netflix down 52. MicroStrategy up 167%. And one last factoid, out of the 500 S&P companies, there are only 14 companies that outperformed us in the time period. We outperformed 97% of the S&P, and the ones that outperformed us, you could have guessed, are like energy companies, and they were selling oil when oil hit $0 a barrel, and their stocks smashed back. So we're totally fine. I'm fine. The company's strategy is working well. If you had said in the second quarter of 2020, I want you to come up with a strategy for a low-growth, mid-size software company to outperform every asset class, all big tech stocks, and every enterprise software company by a factor of 3 to 10, right? This is the only one that you could have come up with, and we actually did it. I think what throws people off is that the stock got volatile. Like the way we've done it is with volatility. The company's stock traded a few $1 million a day when we started. Now it trades hundreds of millions of dollars a day. The open interest and the options have exploded. The stock, has exploded up, exploded down, exploded up. It moves all around, just like Bitcoin, which has gone through almost 3 cycles in the past 2 years. So I would say, to summarize, conventional critics and conventional mainstream analysts, they don't get the crypto economy, they don't understand Bitcoin, and they hate volatility. And those are the people that would tell you, take all your money, put it in a bank account yielding 1% interest, and just don't lose it and don't bother us. But when we embraced the Bitcoin strategy, we did it because we knew that if we held our cash in a bank account, it was going to lose 20% of its purchasing power per year. And it has, as predicted. The money supply expanded by 40%. Single-family homes in the U.S. have increased in price 40%. If you had $500 million, it would have bought you the 40% less today than it would have bought you 2 years ago. So we had to do something for our shareholders at the time, and that something was buy high-quality digital property, and our choice was, we could suffer a non-volatile slow death, or we could get on a bumpy lifeboat, a big orange lifeboat, the Bitcoin lifeboat, and we're going to get tossed around in the ocean, but we're going to float, and we're going to appreciate over time. And when I started buying this stuff, Bitcoin was $9,000, $10,000 a coin, and we've just been consistently accumulating Bitcoin. We have not sold any Bitcoin. And if you're a short time horizon person and you want to look at making a trade in the past 3 months or 6 months, just about everything you could have bought in the world in the past 6 months is a losing trade if you have a short enough time frame. But if you have a 2-year time frame, Bitcoin's winning. It's winning over 4 years, it's winning over 6 years, it's winning over 8 years, and I just like to be in business more than 2 years from now, so that's why we did it. I did another 4-hour thing with, with Lex Friedman and a 4-hour discussion in my library in my house in Miami. It's been seen by 3.9 million people. And I calculated that that's like more communication than every meeting I had in my entire life. So the short answer is, I think I'll go on the podcast circuit. I do like teaching, and I'm very open to looking at more academic things. But I think the way to do it in the 21st century is with scalable podcast mediums and streaming video, and not the 20th century way is going to a classroom with 100 students at a time. Think about, 100 students at a time, teach 2 semesters and get to 200 students a year, and teach for 40 years or 20 years and get to 4,000 students. And you get to 4,000 people on your show right in the first few minutes after you upload it, don't you? Incredible large heckloads of money. Yeah, I mean, if we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable. So that melted down a lot of the cryptos and resulted in the unwinding of the 3 Arrows, Voyager, and Celsius bets. And I think a lot of people took a lot of inappropriate risk, right? The cryptos were unregistered securities, but then loaning out hundreds of millions of dollars without collateral or under collateralized loans amongst the crypto hedge funds, that created a margin call run. And so they ended up becoming forced sellers and liquidating positions in a panic. And that took us all the way to 30,000. And I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound. And you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. So that's what takes the market down. And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to 3 Arrows, it's awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. You've already heard Janet Yellen endorse Bitcoin as commodity. We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as an institutional investment grade asset being embraced by regulators, legislatures, and large-scale investors. And the entire market's been very educated by this crypto crash. Now it's obvious to people the difference between the good, the bad, and the ugly, right? The good would be a stable coin backed by cash equivalents that are transparently published every week, like Circle, right? The bad might be a tether, which it works and they're competent, but it's opaque. And the ugly is the UST that just completely melts to zero. And you could likewise say Bitcoin is the good, right? It's a digital commodity, decentralized, with no issuer, without counterparty risk, non-sovereign store of value. And then you've got all the other creatures, you know, many of which are unregistered securities, and this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives, and that is educating the market. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified, and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that, you know, there is a counterparty risk to pursuing this. And this has educated the market, you know, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem. I think that the entire universe is made of energy. Like the earth is energy, a building is energy, matter is energy. And I think that energy is a more powerful idea than matter. I guess you could say that, you know, the struggle of the human condition, it catalyzes the development of new technologies, one after the other. It penalizes anybody that rejects ocean power, right, gets penalized. You reject artillery, you get penalized. You reject atomic power, you get penalized. If you reject digital power, cyber power, you get penalized. And the underlying control of the property keeps shifting hands from, you know, one institution or one government to another based upon how rationally they're able to channel that energy. The most important thing Satoshi did was he created this gift. He gave it to the world. I assume a he. Some people think she. Some people think it's multiple people. But Satoshi gave this gift to the world and disappeared. To engineer is divine. You can make lots of arguments as why we're here. We're either here to entertain ourselves, or we're here to create something that's beautiful or something that's functional. I think if you're an engineer, you entertain yourself by creating something that's both beautiful and functional. Because it's the hardest to tax, and it's the hardest to steal, and it's the hardest to confiscate, you know, it makes it the last thing in the world you're going to attack, the path of least resistance. Right? When it's time for me to tax property in California, I'm going to put a tax on the building. Buildings don't move. If I put a 2% tax on the Bitcoin's moving to Wyoming. If I put a 2% tax in Wyoming, it's moving to whatever state in the union they didn't tax it. And when the entire country taxes it, it's moving to Monaco. And if everybody, you know, in Monaco taxes it, I can sell it to someone in China, right? It's universally desirable, scarce property, hard to steal. You can sell it, you can put a lien on it, you can mortgage it, you can develop it, you can protect it. But the most likely thing to happen next is large acquisitions by institutional investors of Bitcoin as a digital gold, where they're just swapping out gold for digital gold and thinking of it like that. And the government entities most likely to be involved with that would be sovereign wealth funds. if you look at all the sovereign wealth funds that are holding big tech stock, equities, the Swiss, the Norwegians, the Middle Easterners, if you can hold big tech, then holding digital gold would be, not far removed from that. That's a non-controversial adoption. I think there are opportunities for governments that are much more profound, right? If a government started to adopt Bitcoin as a Treasury reserve asset, that's much bigger than just an asset investment. That's 100x bigger. And you could imagine that's like $1 trillion opportunity. Like any government that wanted to adopt it as a Treasury reserve asset would probably generate trillions of dollars, $1 trillion or more of value. And then, the thing that people think about is, well, will oil ever be priced in Bitcoin or any other export commodity? I think there's like $1.8 trillion or more of export commodities in the world, and right now they're all priced in dollars. I think that this is a colorful thing, but it's not really that relevant. Like you could sell all that stuff in dollars. The relevant decision that any institution makes, whether they're a nonprofit, a university, a corporation, or a government, is what's your Treasury reserve asset? And if your Treasury reserve asset is the peso, and if the peso is losing 20% or 30% of its value a year, then your balance sheet is collapsing within 5 years. And if the Treasury reserve asset is dollars and currency derivatives and U.S. Treasuries, then you're getting your right now it's probably 15% or more monetary inflation. We're running double the historic average. You could argue triple, somewhere between double and triple, depending upon what your metric is. Bitcoin. When you get into this issue of currency wars, you've moved into debates between nation states. And I just don't think it's a good use of time. I think it's much more constructive for us to focus upon getting people to reallocate energy from the 99% of the assets which are not currently Bitcoin and not currently digital. And if they just sweep them all to digital, right, then you'll get to see a rationalization of investment portfolios. What is Bitcoin? Well, Bitcoin is the world's first engineered monetary system. And what happened is a set of engineers, nameless engineers, recoiled in horror after the great financial crisis with all the bank bailouts. And they looked and they said, this just isn't fair. It isn't right. We want to create a better money. And they used two technologies. They used the internet, the idea that I could network hundreds of thousands or millions of computers. And they used cryptography, the idea that I could cryptographically sign something so that it could not be tampered with anyone, friend or foe. And using those two technologies, they conceptualized the idea of an immutable ledger, if you will, a bank in cyberspace. Engineering, harnessing energy and technique to make the world a better place than you found it. Right? From the point that we actually started to play with fire, right? That was a big leap forward. Harnessing the power of kinetic energy and missiles, another step forward. Every city built on water. Why water? Well, water's bringing energy, right? If you actually put a turbine, on a river, or you capture a change in elevation of water, you've literally harnessed gravitational energy. But water is also bringing you food. It's also giving you, a cheap form of getting rid of your waste. It's also giving you free transportation. You want to move 1-ton blocks around. You want to move them in water. So I think, the human story is really the story of engineering a better world. And the rise in the human condition is determined by those groups of people, those civilizations that were best at harnessing energy. Right? If you look, the Greek civilization, they built it around ports and seaports and water, and created a trading network. The Romans were really good at harnessing all sorts of engineering. The aqueducts are a great example. If you go to any big city, you travel through cities in the Med, you find that, the carrying capacity of the city or the island is 5,000 people without running water. And then if you can find a way to bring water to it, it increases by a factor of 10. And so human flourishing is really only possible through that channeling of energy. What if 100 people got together, 100 people with money got together, and they said, we're going to create a bank in cyberspace, and we want to put our money there, and we don't trust each other, we don't trust the government, we don't trust any corporation, we don't even trust any one computer. So we create a program that keeps track of a ledger, 21 million coins, or shares in the bank, divisible by 100 million, down to a Satoshi. So 2.1 quadrillion Satoshis. You don't have to know that. All you need to know is there's 21 million coin units. You can't make any more. And they wanted to create it so that they could send their money to each other, to anybody in the network. They could store it for 1,000 years, 10,000 years, 1,000,000 years, forever. And they don't have to trust anybody. So they created this idea of Bitcoin. It's an asset that's protected by cryptography, and it's stored on a ledger. The software administers the ledger. The twist is we distributed the software on thousands and thousands of separate computers. Every Bitcoin node is running a copy of the ledger. So everybody in the world that has their money in the bank has a copy of all of the money in the bank and all the transactions since the beginning of time. So it's the immutable truth. Every 10 minutes, the system batches a set of transactions and then redistributes the money based upon the instructions of the owners. If I want to send you my Bitcoin, I send it and it goes to you, and every single computer on the network updates that. And they all check it cryptographically using modern encryption. Like, for example, if you ask me, should I own Bitcoin or MicroStrategy stock? Well, the answer is Bitcoin is a property. MicroStrategy stock is a security. When you're buying the security, you're taking management team risk, competitive risk, execution risk. Focus your energy, guard your time, train your mind, train your body, think for yourself, curate your friends, curate your environment, keep your promises, stay cheerful and constructive, and upgrade the world. I think that the politics right now are such that you kind of have crypto versus Bitcoin. You have all the altcoins versus Bitcoin, and generally, if the altcoins could drag Bitcoin into the debate, right? If it's bad for the altcoin, they want it to be bad for Bitcoin so that all the Bitcoiners will support their position. So I think you see a lot of that. If I want to be a consumer and live in my parents' basement and order Domino's pizza and take Ubers and watch Netflix and stream YouTube, the inflation rate will be the CPI. It'll be very low. No, I think the provenance is really important. And if I were to look at the highlighted points, I think having a founder that was anonymous or pseudonymous is important. I think the founder disappearing is also important. I think that the fact that the Satoshi coins never moved is also important. I think the lack of an initial coin offering is also important. I think the lack of a corporate sponsor is important. I think the fact that it traded for 15 months with no commercial value was also important. I think that the simplicity of the protocol is very important. And I think that the outcome of the block size wars is very important. And all of those things add up to common property. They're all indicators of a digital property as opposed to a security. If there was a Satoshi sitting on top of $50 billion worth of Bitcoin, I don't think it would cripple Bitcoin as property, but I think it would undermine its digital property. And if I wanted to undermine a crypto asset network, I would do the opposite of all those things. I would launch one myself. I would sell 25% or 50% to the general public. I would keep some of the initial, I would pre-mine some stuff or early mine it, and I would keep an influence on it. Those are all the opposite of what you would do in order to create common property. And so I see the entire story as Satoshi giving a gift of digital property to the human race and disappearing. You're going to hold it for decades. You're going to give it to your children. When I go, all my assets will flow into a foundation, and the foundation's mission is to make education free for everybody forever. And if I'm able to contribute to the creation of a more perfect monetary system, then maybe that foundation will go on forever. Just keep in mind, the basis of securities laws are biblical. I believe that Bitcoin is a massive breakthrough for the human race that will cure half the problems in the world and generate hundreds of trillions of dollars of economic value to the civilization. And I believe that it's in an early stage where many people don't understand it and they're afraid of it, and there's FUD and there's uncertainty, there's doubt, and there's fear. And there's a very noisy crypto world, and there's 15,000 other cryptos that are seeking relevance. And I think most of the FUD is actually fueled by the other crypto entrepreneurs. So the environmental FUD and the other types of uncertainty that surround Bitcoin, generally, they're not coming from legitimate environmentalists. They don't come from legitimate critics. They actually are guerrilla marketing campaigns that are being financed and fueled by other crypto entrepreneurs because they have an interest in doing so. The way I divide the world is, right, there's investment, there's saving, and there's speculation, and there's trading. So Bitcoin is an asset for saving. If you want to save money for 100 years, you don't really want to take on execution risk or the like. So you're just buying something to hold forever. For you to actually endorse something as a property, like if you said to me, Mike, what should I buy for the next 100 years? I say, well, some amount of real estate, some amount of scarce collectibles, some amount of Bitcoin, right? You can run your company, right? But running your company is an investment. So the savings are properties. If you said, what should I invest in? I'd say, well, here's a list of good companies, private companies. You could start your own company. That's an investment, right? If you said, what should I trade? Well, trading is like a proprietary thing. Like I don't have any special insight into that. If you're a good trader, you know you are. If you said to me, what should you speculate in? Mm-hmm. We talk about meme stocks and meme coins, and it's kind of sits up there. It sits right in the same space with what horse should you bet on, and what sports team should you gamble on, and should you bet on black 6 times in a row and double down each time. It's fun, but at the end of the day, it's a speculation. Speed of sound, speed of light. Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There is no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best. I think it'll go forever, right? I think the Bitcoin is going to climb in a serpentine fashion. It's going to advance and come back, and it's going to keep climbing. I think that the volatility attracts all the capital into the marketplace. And so the volatility makes it the most interesting thing in the financial universe. It also generates massive yield and massive returns for traders. And that attracts capital. Like we're talking about the difference between 5% return and 500% return. Mm-hmm. So the fast money is attracted by the volatility. The volatility has been decreasing year by year by year. I think that it's stabilizing. I don't think we'll see as much volatility in the future as we have in the past. I think that if we look at Bitcoin and model it as digital gold, the market cap goes to between 10 and 20 trillion. But gold is defective property. Gold is dead money. You have $1 billion of gold that sits in a vault for a decade. It's very hard to mortgage the gold. It's also very hard to rent the gold. You can't loan the gold. No one's going to create a business with your gold. So gold doesn't generate much of a yield. So for that reason, most people wouldn't store $1 billion for a decade in gold. They would buy $1 billion of commercial real estate, property. And the reason why is because I can rent it and generate a yield on it that's in excess of the maintenance cost. So if you consider digital property, that's $100 to $200 trillion addressable market. So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.